Good afternoon, everybody. Getting in the recap here for today. Start quickly on the highest time frame here. You can see we just returned into this new day opening gap that we've been playing with. So it's a new day opening gap on a daily chart. It's actually a daily volume imbalance. That's why we kind of have it on here, right? It's going to be important. Price ended up drawing up into that after returning into this hourly fair value gap. And you'll see kind of all the workings that happened within here. But yeah, higher time frame delivered nicely, holding that. And now we're sitting just at the low of that daily fair value gap, or volume imbalance, excuse me. As we go to the 15, you'll kind of see, right, this 15 minute here held us predominantly most of the morning. We finally were able to get above it, and then it became an inversion, sent us into that volume imbalance high. So kind of as we would expect, seeing these fair value gaps become inversions, offering support, trading up higher. If we take a look quickly, you'll see that we had labeled sell side, so this was the trade we shared this morning. On a higher time frame right now, you'll see it better on a lower time frame. But we're just delivering into sell side, right? Another inefficiency, holding that nicely with the candle bodies. New day opening gap held nice once we got back above it with this 15-minute fair value gap as well. So we kind of have these areas that we can look at. As we continue to work lower now, we'll see how they played out. This level I have here is the previous day's high. So heading into New York, we came and cleared out yesterday's high. So that's why we were looking for lower prices heading into New York until we reached our sell side objective. Let's go ahead and look now, 5 minute. And we'll just go straight down to the lower time frame, honestly. The one that we were looking at here is the 1 minute. So if we work to the 1 minute now, we had noticed that right at that previous day high, we create the YouTube model. We clear equal highs. This is the 5 minute, or excuse me, the 15-minute fair value gap. Remember that. But on the 1 minute, we actually get the YouTube model formed here. So we clear these short-term highs. We break structure at all of these lows. All right, short-term low here, bearish. And now on the 1 minute chart, we have this 1 minute fair value gap here. So inside of the 15, we also have the 1 minute. You see how nicely that holds us. And this would have been the low risk sell following the 8:30 opening. You read that news. And from there, we just trended lower into our sell side. All within here now, we can go ahead and take a look. As we were coming into the 9:30 opening, our attention now was on this 1 minute here. And we also had this 1 minute fair value gap here. So we're just watching and seeing how we had already cleared yesterday's daily high. We would expect price to now break down and continue to deliver lower. So in our mind, we had this sell side, right, kind of aiming for that. As we head into 9:30, you'll see that we had already cleared this sell side. So we run into this sell side at 9:25. And now we hold kind of that low with the bodies until we get into that 9:30 opening, and we can create the Judah swing here. So as we hold this liquidity level here after running that sell side, we return up into now the fair value gaps left behind, right? And you see how all of these are overlapping. So once you understand how the PD array matrix works, this is how you can go about finding right, kind of where price wants to go and why. We're expecting lower prices, but because we've already delivered into this sell side, we have to, right, look for price to first create kind of that Judah swing. So in this case, we're going to return into this inefficiency, into this original fair value gap, while at the same time, just running equal highs here. So although it's not significant, right, we still have equal highs, and they still get ran here. So now we're clearing short-term highs, returning up into the inefficiency. Right at 9:30, we create that quick move up, slam back down, and now notice we close below this swing point. So at this point, we were looking for this fair value gap to hold us. We went short right on this fair value gap. Right, so you can see that here. As we trade up into this fair value gap, we add a position, and then we were just looking for, right, if we scroll to the left, 5 handles really. So we had equal lows, we had all these lows we were looking for. We ended up getting out at this inefficiency on the 1 minute. Right, if we zoom in. So this untapped inefficiency here, this fair value gap, we end up targeting this because it's aligned with our 5 handles. So you'll see that we end up right breaking through that. It's also let me go down to a 5 minute. We have a 5 minute fair value gap here. and then I'll actually label the 15 that we were using. So you can see all the fair value gaps that we were looking at and why we were doing what we were doing. So there's the 5, and here's the 15. So back on the lower time frame now, you'll see we've transposed all of the higher time frame fair value gaps. And this is what we're doing in real time. So we can see that, right, as we deliver into the first 15 minute here, it's aligning with our 5 handles. We go ahead and exit our position. If we go ahead and pull up consequent encroachment now of this 15 minute, you'll see that aligns beautifully with, let me pull this up like this here. It aligns perfectly with the fair value gap that we created. And this is where our second entry comes in. So you can see on the 15 minute fair value gap, as we close below it, bouncing off of this 5 minute, this is where the video starts, right? And you see me explain, we would expect price to hold off this original 5 minute because we need to wait for the 15 minute candlestick to close. So we're gonna just add some time distortion here. Our entry came right at the consequent encroachment of this fair value gap here. So right as we tap into that, we go ahead and go short, stop loss above this consequent encroachments. But yeah, this was a real nice and obvious setup because we had broken through the 15 minute, leaving behind that fair value gap, perfectly aligned with the 15 minute consequent encroachment. We still had lower objectives, right? This low here are these relative equal lows, and it's just above the 15 minute. So a lot of things lining up, giving us the understanding that we were looking for there. Right, we ended up selling just a tick short as price wicked into this. Didn't want to be too greedy, so we just closed on this close there. But you'll see, after creating that low, we then sweep the low quickly. Break structure here at the high. And then that's when you see us add the second position here, right, as we continue to trade higher. Right, we see we added on the breaker. So as we form this little model here, you can see how we have now, right, the breaker block, low, high, lower, low, gets broken. So we're using that to now continue to expand. All right, we'll clear that. We also had the volume imbalance. So as we were looking at this, we had a lot of discounts that were going to hold price. Right, we of course have the original 5 minute fair value gap here. So a lot of things lined up, and that's why we like that area here. Ultimately, we break higher, getting back above this shaded area is the new day opening gap. So that was our first exit. But eventually we just return into this fair value gap. We try to get for this high, but we end up creating just a quick short-term buy side. And you'll see this is kind of where we ended up getting stopped at break even. We tried to use this original inversion, right? Hoping price would hold here, deliver us into this buy side. But you see we fell just short. We'll pull up that buy side now. So as we fall short, we give a deeper retracement just into now this original, right? Still the original 5 minute, and actually the 1 minute that was untouched from this original setup. So now if you were to look at this, I'm gonna move the inversion. Remember that 5 minutes there, it's also important. But if we looked at this, just like a clear-cut kind of YouTube model, right? Short-term low cleared, market structure shift, fair value up gets left behind. We come into that, find support there beautifully, and then start ripping higher. It's at this point that we understand, right? We've already done the work of retracing into a discount. So once we now break this high, we would expect price to continue to run. Our attention immediately went to this fair value gap here. Right, as the 1 minute digs into it, it's also because it's still this original fair value gap. So we're kind of looking at both. But as we create now another breaker in the form of these up close candles, notice how the breaker consequent encroachment, mean threshold, and the fair value gap's consequent encroachment line up here. So that's why we were looking at this 1 minute fair value gap. Once we got confirmation this would hold, that comes in the form of this volume imbalance. We just went long there. So that's our volume imbalance entry. We try to get, as soon as it taps this candle's close, we go long, and we were just targeting buy side. Right, so we get out at that fair value gap and then end up getting stop and profit as price returns into just this little leg here. Ultimately, that was all that we did for the morning, and then you see there we enter a consolidation. So pretty ugly consolidation heading into lunch. We can see over the lunch hour and heading into lunch, just chopping here, right? Consolidating. We end up clearing some lows. At this point, that new day opening gap is kind of supporting us. Right, we clear that short-term low here. We try to clear a low again, instead find support at that new day opening gap. Right, leaving now balanced price range, fair value gap. So breaking a bearish as well as a bullish. Holding here, right, obviously once we get back above this original 15, remember this is our 15, we'll show you quickly. Let's not get lost here, a lot going on. But this is this 15-minute here. So if we can get above it, we would expect that to act as support, right, on a higher time frame. You'll see that we close above it here, and we do spend some time going back and forth, right, ultimately kind of hitting volume imbalance, just discounts in here. But as we head into the afternoon, 1:30, then we finally do start to trend into our daily volume imbalance. So after returning into sell side here, right, the next obvious target was the daily volume imbalance, and we had that marked out as well. So ugly delivery up into it, right, we do have setups in here that we could capitalize on. Right, one that immediately jumps out to me was coming right at 1:30. So we return into the 15-minute inversion here. Right, if I pull that out, hitting the 8:30 open, hitting yesterday's high, right, old highs will act as support. And we leave a fair value gap here now. Right, we can also see this as a quick little fractalized YouTube model. This is a short-term low here. We run that short-term low. We then create a market structure shift, leaving a fair value gap. We wick into it quickly, and then from there it was off to the races. Right, so that would have been a nice opportunity. Stop below swing lows. To just target now, right, consequent encroachment first, and then if you wanted to hold for the high, perfect delivery into that high. Once we hit that high, we continue to consolidate. We actually retrace back into its low. From here, you'll see we get another setup. So at 2:30 now, all right, we clear equal lows, short-term lows cleared. This counts as a swing point, so we break structure here. And now notice we leave a fair value gap perfectly aligned with the daily volume imbalance. So seeing something like that, we can go ahead and trust fair value gaps like this, especially if it's already happening, right, at a higher time frame discount, and we're expecting price to continue to run. Seeing this perfectly deliver into this high, we can expect this buy side to want to be ran again. So now we just have to look for, right, a reason for price to do that. And we get that here. As we return into that discount, we create the YouTube model, and then from there we just once again continue to deliver, right, using discounts on the way up as we run into our buy side objective. At this point we create equal highs. You actually see that during power hour we've created equal highs as well. So power hour rather lackluster. You do get some movements lower, right? We get underneath this volume imbalance. We can maybe use it here. Right, these are kind of just journaling, back testing, rereading price, right? 5 handles is kind of all we would aim for. So something like this we could have panned out as price clears a short-term high, so a little fractalized YouTube setup. Breaking structure. And then just using that volume imbalance as the PDA ready to get short. But nothing really too fancy in here, right? Most of the work was done once we hit that daily volume imbalance high. Because you have to think on that daily chart, we've now priced into it. So we just kind of want to spend some time in here and end up consolidating the remainder of the afternoon. We do have these perfectly equal highs now though, however. So going forward, I would like to see if price wants to revisit those. Okay, so we have this low here. Say price wants to run out a low before continuing for buy side. Right, this would be our next sell side pull. I could see us revisiting this old high, even all the way back into the 15-minute. Ideally though, we'd like to see what this 1 hour fair value up here can do. That's aligned with the daily volume imbalance low. So at this point, as long as we can keep finding support at the daily volume imbalance, we would look for buy side. But yeah, that was today. Right, honestly, really clean morning. It was nice to see price kind of deliver just as we are expecting. Right, so bearish delivery all in here. Clean YouTube setup, right? Another clean continuation setup. Look at the way the bodies hold that fair value gap beautifully. And our target gets met nicely. Right, we then get that clean reversal. So now a reversal YouTube setup are able to enter on the breaker block, original 5-minute up into our new day opening gap. We retrace. This is also an optimal trade entry, if we notice that. So we retrace into OTE, into a discount fair value gap, and then we give us another opportunity to get long into the buy side. So all in all, good day. And we'll see if we can't come back tomorrow and just see what we get. NFP on Friday, so a little less, we'll say, ambitious to be entering trades. We like to just tape read though. And that's what we'll do tomorrow morning. So until then, have a good night, everybody, and we will talk in the morning. See ya.